Get Rich Slow with John Wolf. Hey, I have been getting questions and calls from several people about the mortgage deferral that you can make because of the COVID-19. And I've been hearing tons of misinformation. I had a client call me with a bunch of disinformation from their current mortgage lender, On Point, who I'm going to shame because you gave them terrible advice that wasn't true. And anyways, I just want to go over it really quick. There are some very important points, and this client was specifically trying to do something that was suggested by Meet Kevin, and it absolutely doesn't work, so you shouldn't do it. But let's talk about that. So what the client wanted to do, and they called their mortgage servicer, which happened to be On Point, was they wanted to do the 6-month deferment, save that money, and use that to buy an investment property. There's a lot wrong with that. They were told by On Point also that it wouldn't be reported on their credit, and On Point told them, for some reason, this I don't understand, that 2 months after they catch up on their deferred payments, then they're allowed to do a refinance. So all of that is wrong and doesn't work in any way, and I want to help you avoid it. And I'm going to tell you a much better way of accomplishing the same thing, which I told them. And they did decide to definitely not do the mortgage forbearance, and I do believe they're going to try the other plan. But anyways, so let's just break this down a little bit. So it is totally true that if you self-attest that you have economic hardship right now and get a hold of your mortgage servicer and follow the steps, that you can defer 6 months of payments, and you're allowed to do that twice in a row for 12 payments. Now, the lender is specifically not allowed to give you any fines or special charges, but they will absolutely keep charging you for insurance, absolutely keep charging you for taxes, and they will absolutely keep putting interest and interest on the interest and interest on the missed payments. So if you defer for 12 months and then you just end up paying it at the end of the mortgage, which is at least the smarter way that some of these mortgage companies have done it, you should expect to pay those 12 months for something close to 36 or more months because of the amount of interest that got to accumulate over that time and the missed principal payments. But anyways, their plan of buying an investment property is not going to work for a bunch of reasons. So let's go over that really quick. Now, first, as soon as you call your mortgage servicer and ask about starting to set up, they're going to put that on your credit. I've seen it on people's credits already. It drops you 20 to 40 points. If you actually do the deferment, every single month you defer is also going to be reported on your credit, and that's probably going to stay there for 10 years / forever. And that may be used in the future to make decisions about your creditworthiness, credit score, all that good stuff. And probably the most important thing that stops that plan from working whatsoever is the fact that if you have any mortgage deferment open whatsoever and you still owe on it, there is no lender I'm aware of that will give you money, refinance, purchase, especially not an investment property. There's no lender I'm aware of that will grant you financing. Now, the weird thing that On Point told them was that 2 months after they come current, then they're allowed to get a refinance. Every single lender I'm aware of, and certainly my company, Caliber Home Loan, the day after we can prove, because there's paperwork involved always, that you have come current on your mortgage, I can do a refinance for you. I can do a new purchase for you. Just so that's clear. Now, you probably have a lower credit score, so it might not look as good. And I did, yes, bury the lead. There is a way better way of accomplishing what they wanted to do. And here it is. So I'm not going to use their example here. I'm going to use more of a normal example for the Portland Metro. But let's just say that, you bought a house in the $500,000 range a few years ago in Portland, and you owe, let's just say $400,000 flat to make the number easy to work with, right? Well, instead of deferring your mortgage payment for 12 months, and, a mortgage payment for something like that is probably close to $3,000 a month, right? So instead of doing that, what you could do is you could just do a normal refinance. And let's say your interest rate was, 4.5%. and we do a refinance now, and maybe your interest rate's going to be like, 2.75%. Yay, great. But that's actually not the point. The point of this discussion is how much cash you can get in hand now. So when you do the refinance, you will, depending on the date, skip 1 or 2 months worth of payments. Now we can engineer it to be 2 months. So you can skip 2 months payments. So that's $6,000 there. And also the $4,000 loan, I can get you $4,000 cash at signing from your equity. So now we're up to $10,000. And at least if the refinancing was closing right now, we would establish a new escrow account, again, from the equity of your home. Now, a home in that price range in the Portland area, there's a decent chance that your taxes are $4,000 to $8,000 a year, and the escrow account for your current mortgage provider has enough cash in it to pay that. So when we set up your new loan, you'll actually be refunded from your old mortgage company that escrow account. Now, that's already your money, but I'm just getting it freed up and in play for you. So that means you have another $4,000 to $8,000. And at the end of all of this, what I've seen several times is my clients' payments going down $100 to $400 a month. So imagine that. You could do a refinance now. You could end up with $14,000 to $18,000 cash in hand and have a monthly payment that's, $100 to $400 a month less. I've done this for a bunch of my clients over the last few months, but that's a normal refinance. Compare that to, deferring 6 months of payments, which you're going to have to pay back. So 6 months of payment, 300, darn, it's hard to do math in front of the camera. I think that's $18,000. So you could have the same effect from a refinance, cash in hand today, and a deferment, but you wouldn't tank your credit and you'd have a lower payment. Wow. Isn't that amazing? The more you know. So, hey, gotten lots of great questions recently. I'm trying to get better at noting them down and remembering to answer them in my actual videos. But please like, share, subscribe, comment. Let me know what's good, bad, and ugly. Have an awesome day. Bye.